Today, we're diving into the dynamics surrounding SoFi. The market has been quite active, and it's essential to understand why SoFi's stock is experiencing a downturn. We'll dissect the contributing factors and relevant data points.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Currently, SoFi's stock has decreased by 3 to 4%, hitting a low of $6.81 today. Interestingly, this dip is not driven by company-specific news or filings with the SEC. Instead, it reflects broader market reactions to economic indicators, specifically the Producer Price Index (PPI) and jobless claims. These economic reports have led to a market-wide sell-off, and SoFi is caught in the wave. I'll share an analyst's perspective on how PPI impacts stocks. Generally, we observe a market sell-off in response to such economic data. However, short sellers are not particularly active today, which is an unusual yet telling sign. The return of 225,000 shares by short sellers indicates that today's downturn might be overblown. Currently, 17.38% of SoFi's free float is shorted, with a utilization rate of 71.62% and an average borrowing cost of 0.57%. Let's clarify the short selling data. When we mention that 225,000 shares are returned, it doesn't imply that's all short sellers have done today. Typically, about 40% of daily trading volume involves short sellers entering and exiting positions. So, this net return is part of a broader activity throughout the day. Turning to options trading, today we've seen $0.72 million in call options and $926,000 in put options, with a bearish sentiment dominating at 44%. For call options, the consensus target price hovers around $7. Open interest for the upcoming expiration date on June 14 shows 38,000 contracts at $7 and 36,000 at $7.50, suggesting SoFi might face challenges around the $7 mark this week. Yesterday, SoFi hit a high of $7.40, indicating initial optimism. However, big money seems hesitant to make long-term investments. Today's market transactions reflect volatility rather than solid institutional buying. This uncertainty is partly due to the market's mixed interpretation of the PPI data. Technically, SoFi is trading between $6.93, a previous support level, and lower bounds. This support didn't hold for long, as evident in the 4-hour and 1-day charts. The next key support level to watch is $6.69, which has been tested multiple times in the past 2 weeks and has held up well. This level might be the next significant point for SoFi, given its resilience. Analyzing SoFi's technical indicators, the stock is transitioning from the upper to the lower percentile of the Bollinger Band, with a bearish deviation in the stochastic oscillator. This indicates a possible oversold condition, leading to today's sell-off. Despite the downturn, retail investors are slowly exiting their positions. Personally, I almost bought more SoFi shares today, but I am waiting for a better entry point around the $6.70 support level. I did recently buy 500 shares at $6.90, but I'm cautious about going all in at this stage. If SoFi breaks below this support, it could signal further declines. The Elliott Wave technicals suggest a pivot point at $7.20. If SoFi stays above this level, it might reach the mid to low $8 range. Currently, the stock shows signs of a further breakdown. Investing in SoFi can feel like a roller coaster due to its volatility and significant short selling activity. Nearly half of the daily trading volume sometimes involves shorts, making SoFi susceptible to manipulation. Shorts seem to control SoFi's price movements, keeping it within a narrow range. If SoFi's CEO, Anthony Noto, made a strong statement against short sellers, similar to what Palantir's CEO did, it might help the stock. However, Anthony's professional demeanor makes this unlikely. In conclusion, today's sell-off in SoFi reflects broader market reactions rather than company-specific issues. The technical indicators suggest potential support levels to watch, and the broader market analysis offers a perspective on value investing. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.